Hey guys, thank you so much for joining me for another episode of Breaking Bitcoin Market Update. I'm Justin Wise, your host today, lead analyst and senior mentor here at Kraken Cryptocurrency. Again, hope you guys are doing absolutely fantastic wherever you happen to be tuning in from. I do apologize. We do seem to be getting a little bit of upstream error. So I'm going to do my best to just be very patient and calm with the individuals who are providing the ISP over here. But when the show is over, I'm going to be on the telephone. I'm definitely going to be on the telephone. So anyways, thank you guys so much for joining me. I see the regulars in here. I see Jasper, Hugo, Chill, Turd Ferguson. What's going on, guys? Good to see you in here. Jurgen Ernst, as always, man. Thank you so much for joining me. Mastash, what's going on, my good brother? FN Based. Bad Andy, Wayne Tech. Even a few other people in here. All right, doing good, guys. So some pretty good activity from Bitcoin last night, hitting a low, popping back up into consolidation. We're going to break that all down. Give you guys an updates on my position. Not the most, it's just amazing to see the volatility return to this market, and for me to actually be able to actively, day trade my favorite asset at a period when you wouldn't. So, obviously yesterday we were looking at the 15-minute chart. That's stuff we haven't done in a long time. That's stuff that we were doing on altcoins because the volatility was there in altcoins. And now we can finally return and do it more profitably on our favorite asset of choice, man. If you guys are having a little bit of lag or a little bit of stream, just click somewhere back on the YouTube and watch the show, or Twitch, and watch the show like a minute or two in delay, and it should take care of that lag issue for you. Meanwhile, I will get the battle axe out and I will send the troops down to MediaCom. Feel free to tweet at them, man. Illuminati sabotage. We ain't going nowhere. All right, good to see you guys. So let's get over here. Let me make sure I got everything pulled up correctly. Let's head over here into the live scene and see what's going on. All right, awesome. Hopefully everything is working and is not broke. Everything looks to be operating quite nicely. Did a few upgrades to the stream last night, so I should have everything fixed and working. We were missing a few elements, and I think those elements have been replaced. As always, if you guys have some requests, feel free to drop them in the second hour we'll get to what we can when we can, and we'll do what we can. All right, but obviously we're gonna start off with Bitcoin, Ethereum. I'm gonna go ahead and look at Litecoin because it is interesting, and I'm also gonna add Ripple to the schedule because Ripple is very interesting. Obviously, putting in some very nice movement last night. We're gonna look at the two pairings that I am interested in, which is the ZERP UST and obviously the ZERP BTC, depending on which you would like to trade it on. All right, the long timers know the struggles, man. I tell you what, man. I tell you what, we've been through the trenches, man. We've been through the trenches with this upstream, man. And it's just one of those difficult things, man. It's the area where I live, not a lot of service access to a lot of other stuff, but I think I am going to have to make a few phone calls, Some of the people were telling me, just bite the bullet and call some of these other companies and see what you can get done. And I like to give people the benefit of the doubt, I have a pretty good relationship with the people that I work with. I always try to develop longer term relationships, and that is a good strategy, in my opinion, to have. Not only when it comes to life and interpersonal. Basically, I take my philosophy for interpersonal relationships and I try to apply them to business relationships. I would much rather spend the time to work with somebody and get the benefit of the doubt and give people the benefit of the doubt and work with them to develop the skills that I think they need to help them be a successful person. Because it's very easy to turn your back on people. It's very easy to say, well, you're just not cutting it. Screw you, I'm moving on. And sometimes that's what you have to do. But it is incumbent upon you. I think that there's an issue with that in our society, because I think I think a lot of us are lacking a lot of patience. I think a lot of us are lacking in basic, I don't want to say compassion, because I don't want to make it feel like I don't want it to sound like I don't have a lot of faith in other people. But I mean, you just kind of look around at society and a lot of the stuff that's coming out, a lot of desensitizing type nature. I think that it's honestly better. I think you'll get better results in life in general if you really practice patience, humility, and you work on developing the people around you. Surround yourself with people who challenge you, and seek to challenge the people around you as well. That way we can all grow together. I mean, if you want the world to be a better place, change the things around that you can change, that's one of the, of all the people that have affected me most recently, and the books, people ask me all the time, like, what books do I recommend to be a better trader? And there are some good books out there on trading, like Tom DeMark's The New Science of Technical Analysis really affected me fundamentally when I was young and first getting into trading. But now that I've been doing this so long, and I've traded so long, I've done enough doing, and I've had enough success to feel confident and in the pocket with my strategy that I'm comfortable executing, really no matter what the market conditions are. That really all I'm looking for now is to enhance and optimize my psychology. My strategy for trading has been the same for quite a while. I'm always obviously looking to optimize it and improve it. But for me, mostly what I'm looking forward to optimizing as I move forward and continue on with my life as a human being is to optimize my discipline and my psychology. So the books that I recommend now are going to be things like Jocko Willink's Discipline Equals Freedom, which is the best book that I've read, I mean, hands down, in quite a long time. It's just absolutely fantastic. If you want to become a better person, read that book. If you want to become better at all aspects of your life, trading, life management, money management, relationships, read that book. It will transform your life if you take it to heart. All right, anyways, getting down here to the live scene, let's go over here to BitMEX. Let's start with XBT-USD. As I said, putting in some decent activity last night. Let's go ahead and take Ichimoku off, and we'll just look at price action for a little bit. Putting in some decent activity last night. Obviously, after the stream last night, we talked about yesterday how we had entered the short on XBT. Average entry of 52.30 for the trading group. And for myself, took some profits. So we're about 50% out of that position last night. We had taken about 25% profit here, and then I had posted further take profits. So I took another 25% at 4,800 right here as I had posted. Still expecting that movement down to my cyan blue box buy-in territory. But if we look at what price action is doing right now, it's actually fairly interesting. So let's stay here on the 15-minute chart. Let's throw on that Ichimoku, and we can kind of see the same realm, the same progression that we were watching yesterday when we were looking for the short activity. And just pretty much right after we ended the stream yesterday, we saw that nice drop down to about that 4,800 level. Price actually reaching a low on BitMEX of 47.80. So congratulations to anybody who took that short. And that's just one of those things. Usually, for about 3 months, you would not have the ability to catch a highly profitable movement. That was a 5% movement in a couple hours. So congratulations and shout out to everybody on that. Let's see here. All right, cool. And now we're kind of seeing the same thing. So I had set my stop loss on a 15-minute close above the cloud. That was when the future cloud was still bearish and twisting to the downside. Pretty much over the midnight hours, we do see the lower time frame cloud curling up and turning bullish. The future cloud looking bullish on the lower time frames here. So pretty good. This would represent an area of consolidation and accumulation after dropping back lower. And now I kind of have the opinion that now that we have reclaimed the future cloud, just as we saw over here, we saw price crash through the Tenkan-san. The Kijun acted as resistance. Kijun acted as resistance. We had a fake break of the Kijun and then crashed back down below. And we just kind of walked through all those levels of breaking down below, getting rejected from the cloud, getting rejected from the Kijun, getting rejected from the Tenkan. All of those setting you up for a nice, good short. Even if you just took this maneuver here, we talked about rejection from the Tenkan, rejection from the Kijun, rejection from the Kumo, rejection from the Kijun, and rejection from the Tenkan. And right there, that moment in time, if you waited for the confirmation on this candle right here, would have set you up for almost a 3.5% trade. That's a good trade. By any standards, that's a good trade. That's a take your profit. You had a very good trade type day. And you had multiple opportunities to actually make good profits on that. You see, we had a 15-minute buy signal there from time transformation. That is a good counter reversal signal. Obviously that is a buy signal to be going long, and that would have been in retrospect a good entry. You would have had a little bit of drawdown had you entered. So you would have had. Let's throw open the tool here. Make sure I'm on the right page too. All right, cool. You would have had about 2%, maybe one. Let's see here. Ultimately about 2% drawdown, and right now you'd be up about 3%. So not too bad. Again, your stop might have been triggered. I'm not exactly sure what stop and target system you would be using on the 15-minute chart. Obviously, I've talked quite profusely about my stop and target system, but generally we're trading the 8-hour chart. But I do find that with this enhanced volatility, we can actually look at these lower time frames and get actionable material from them. So anyways, what do we see now? We see price crossing above the Tenkan, crossing above the Kijun, pulling back, testing the Tenkan as support. We get a bullish TK cross over here around 11 o'clock at night right here. And we do see price coming up, currently being rejected from that previous level where I still do have my stop loss on my XBT USD short, right around that 50, 36, 50, 60 level. I do want to see a 15-minute close. I wanted to see a 15-minute close above that cloud. That level is going to remain the same for me. I'm not going to do anything different, and neither am I going to enter into a long, even though I'm looking at price and I do think that it's bullish. The reason why I won't be taking a long on XBT is that I've already hedged my position with Ethereum. So was watching Ethereum pretty closely last night, and I saw some obviously dramatic things that make me want to enter into the long. We'll go down to the 15-minute chart, and we'll talk about that. It was actually this moment in time, so we're going to have to go back, and we're going to have to do a little bit of chart replay. We're going to have to clear that bar out good. Okay, so this is basically what I saw here on the 15-minute chart for Ethereum. This was my signal last night, so if you guys are premium members, hey, Ron Legato, thanks so much for the $10 donation, my good friend. Highly appreciated, dude. You're one of the good ones. So we were chilling out in the members lounge last night. I was updating my positions, updating my trades. And this is what I saw on Ethereum. My alert went off. We did enter into the cloud. As you can see, kind of the same situation here for Ethereum after reaching that local top. And we talked about this. We talked about this yesterday, how people were asking, was that the blow off top that you saw? And I said, well, look at Wada Atar. I mean, look, here's the top, right? Let's look at the top, right? Here's the top of Ethereum's price action right here. Look at Wada Atar. This indicator is designed to measure momentum and volatility, right? Look at the size and the girthiness of these green bars, right? So, I mean, it's not overly impressive, right? This blow off top didn't have a whole lot of volume behind it, honestly. Even if we go in and look at regular volume, I mean, there wasn't a whole lot of impressive volume here, you know? Just look at that. I mean, that's not a blow off top. What do we see here? We see a very high volume sell off to the downside. And you don't need to even look at volume. I mean, most of the time you see I don't even have volume on. I just look at Wada Atar because it does that and measures momentum for me. But look at the massive sell off. So that would actually, and again, it's not always this way. It's not always just clear and dry. Like, oh, if you see massive buying, price is going to move down. If you see massive selling, price is going to move up. In general, yes, it can. That doesn't necessarily mean that it's going to be a profitable trade, right? And it doesn't necessarily mean that it's going to be a long-term maneuver, right? You might see a massive sell-off, and yes, set yourself up for a nice 3 to 5% short-term scalp, depending on the average true range, depending on the volatility of the market or the asset that you're trading. But that doesn't necessarily mean that you're entering into a long-term position. So that's a common mistake that I'm going to see a lot of newer traders make, especially when they're getting really interested in price action and volume and things of that nature, is that often sometimes they're able to make profitable trades and sometimes they're able to take that information and make good decisions. But depending on how quickly you can react to those sell-offs, like for example, let's look at the sell-off on Ethereum. How long would you have had? Scroll back in time here a little bit. The 5th of April. We're on the 1-minute chart. Sorry, I'm going to have to scroll back a little bit more here. Okay, here we go. And let's take Ichimoku off. So, let's see. Okay, not too bad. You would have actually had on this example, you would have had some pretty ample time to react. Here on the 1-minute chart, you can see you have about, buying anywhere around here. You had about 1, 2, 3, 4, maybe 5 minutes to buy this opportune bottom. You get the 1-minute buy signal there, get a 1-minute buy signal there. These two were not good trades. But anyways, that would have set you up for a nice 7% maneuver had you been able to buy that bottom. The reality is that most people are not going to be able to respond that quickly. And if they are, I mean, congratulations, man. In fact, you even set yourself up for probably more than a 7% trade, maybe a 10% trade. Let's just assume you bought an average of around here. Okay, no, about a 7% trade. So not too bad, though. Not too bad. But a lot of people will think, okay, well, what time frame do I trade this on? I see a lot of selling activity. I see a lot of unnatural buying activity. Should I be setting myself up for a daily trade? Is this really a trend reversal? Is this a short-term scalp? So I would caution you to use that data and use that information not sparingly, but be very cautious with overly relying on it. Make sure that it is an enhancement to your strategy and not the only part of your strategy. You do want to have something that is if this then that, because that is going to take the guesswork out of trading. And if you don't have a strategy where the guesswork is taken out of your trading, you're not going to have confidence. You're never going to. The worst thing that can happen to you in trading psychologically is asking yourself, well, did I use this right drawing tool at the right time? Is this level actually the right level? Did I draw this fib right? Did I do all this stuff right? Any kind of stuff like that, any tool that makes you question yourself like that is going to be more damaging psychologically than helpful technically, in my humble opinion. And again, this is not a I know, again, because I use horizontal support and resistance, and unfortunately, horizontal support and resistance falls into this category of subjectivity, right? They're a lot better than trend lines. They're a lot better than Fibonacci, in my humble opinion. And the reason why, and listen, I know that there are people who use trend lines, and I know that there are people who use Fibonacci and have amazing success. Most people don't. Most people are not able to use drawing tools and have success. And I try to make videos for the large majority of traders. I know a lot of you are beginner traders. I know a lot of you are fairly new to cryptocurrency. So I want to help you develop your own system and strategy that takes the guesswork out and allows you to actually win in this marketplace. When we know that the failure rate in cryptocurrency and Forex and trading in general is extremely, extremely, extremely high. So if the majority of traders use trend lines and Fibonacci and the majority of traders lose money, are we going to pretend that there's not a connection there? All right, all I'm trying to say. Now, horizontal support and resistance falls into that basket of subjectivity. Now, you know that I use horizontal support and resistance. I really like horizontal support and resistance. I find that the way that I have interpreted horizontal support and resistance, as I've learned to interpret it over the years of using it, does help my efficiency in trading and help me identify key critical turning levels in the market. I understand the inherent risk of that, though, because what I've done is I've identified hotspots where institutional order flow is likely to occur, right? And you never know in advance which way institutional order flow is going to take the market because they have an edge that we don't. A lot of people want to trade like a market maker and they don't understand that you can't. You cannot trade like a market maker if you're not a market maker. You cannot trade like a whale if you're not a whale because you don't know whether a whale is going to reverse price at a horizontal support and resistance level or push price through a horizontal support and resistance level. It's going to be whatever is in the whale's best interest because they have an edge that we do not. And that is that they can typically see, and because exchanges fall into this basket too, because remember, especially with all futured exchanges, they're taking the opposite side of the trade with you. BitMEX, Bybit, Deribit, Monfex, all of them, they're dealer desk exchanges. They take the opposite side of your trade. If you don't think that that's true, you don't understand trading. When you go long on BitMEX is going short against you. They're taking the other side of the trade, and they profit if you lose, right? Exchanges don't like winning traders. They're annoying. So just keep that in mind, man. We're here to BitMEX, Monfex, Bybit, Bitflyer, all of them. They're not here to Bitfinex. They're not here to they're not here to give you money. They're here to take your money. They're exchanges. They make their money off of fees and by taking the opposite side of the trade from you because they know that the majority of traders lose money. So we have to do our best to develop a system that takes all that into account. So just keep that in mind. I use horizontal support and resistance, and I'm aware of its strengths and I'm aware of its drawdowns, and I've devised my strategy around to use it. But again, it works. It works really well. But you always have to be very humble when using a drawing tool. Because if you're able to identify a level on the chart, I guarantee you the whales and institutional order flow can too. And those are levels at which they are going to react if it's in their best interest. And you don't know which way it's going to react. You don't know if a reversal is going to occur at horizontal support and resistance level, and you don't know if a breakout's going to happen. Because it's all in whatever is in order flow's best interest, right? It's all about liquidity. And you do not have the tools to see that information. You don't. The exchanges can't. They can look and see how many people are on one side of the trade and how many people are on the other. And they're going to take it and decide they're going to take it in the opposite side. So if a lot of individuals are short at a particular level, typically order flow is going to take the trade long, and they're going to clear out that liquidity. They're going to stop a lot of traders out before either continuing long or before reversing the market in the other direction. So just be aware of all that, man. I don't think I talk about that enough. Jürgen says, "I'm such a dad." Jake Rezio says, "Clean your damn room." The world a better place starts with a better internet provider. Yeah. So after the show, I'm gonna call some alternative ISP services and see if I can't get some fiber in here, man, because I can't keep dealing with this, man. This is really, I mean, you know, this I take this seriously. I'm here every day for you guys to the best of my ability. I consider this just as seriously as I consider my job. This is part of my job now. You know, doing these shows for you guys every day. You know, it started off being enjoyable for me, but you guys show up every day for me. I'm gonna show up every day for you, just like I show up every day for the guys in the premium group. I do my best to give them my best analysis, the best signals, the best setups, the best education that I possibly can. I work very hard to devise the best strategies and indicators. Yeah, I mean, I work hard. I take this seriously. So I would like my ISP to take it seriously as well. Yeah, if you guys want to spam at Mediacom Cable on Twitter, that would... I'm not telling you to do that, but I'm not saying that I wouldn't like it. Let's see here. Let me scroll down through the comments. Smoke That says, "Hey, Justin, if I joined your group, can I use your custom indicators with a free TradingView account?" Yeah, with a free TradingView account, you can use them, but you do need an account because I need an account to share access to the indicators too. Yeah, man. Yeah, again, sorry, I should probably put up, maybe this will help. Let me add text. Okay. Okay, where'd that go? Oh, shoot. Not what I wanted to do. Sorry, guys. Where should I put this? Right here? Is that too obtrusive? All right, hopefully that's good, guys. Schwartz says, "I feel like we test 8K, like Crypto Twitter and YouTube says." Interesting. Medical Crypto, what's going on Twitch, man? I see you over there. Sorry, my bad, dude. Let me throw some emojis into the Twitch. Throw some kappas into the Twitch. There we go. Oh, I do need to give a shout out. I'm sorry, guys. I'm just trying to stay on track with everything. Where was it, man? It's not showing up over here for some reason. But B Styles 517, thank you so much for the follow on Twitch. And there's I know I'm missing somebody. That's going to be Tuki69 and Crypto Meister. Thanks so much for the subs on Twitch, man. Highly appreciate it, man. Okay, let's get back into it, guys. So yeah, Ethereum and Bitcoin both actually look pretty good right now. Looking a little bullish on the lower time frames here. As I said, if we look right here, let's actually get red of Ichimoku. So this red line here was delineating a key level of resistance. Actually, let's go out to the higher time frames to talk about that. So here we go right there. That red line denoting a significant point of horizontal resistance, in my personal opinion. As we can see, it was a liquidity zone right here and here. Often, when strong resistance, whenever you approach resistance or support on high momentum, often that is a key sign that a reversal is likely to occur. So based on that situation, we can see that price did close a little bit above that resistance line. Keep in mind, whenever we're talking about a horizontal level, we are talking about a zone. Price did close slightly above that level, put in a huge Darth Maul candle just as XBT did, and then closed the next daily below it. We pulled back down to the daily Tenkan-san, so let's throw Ichimoku back on. That's actually where we pulled down to. We pulled down to the daily Tenkan on the Ichimoku, and we bounced right off of it. Now trading nicely above that horizontal level of resistance, and we formed a higher high than our previous daily candle. We have a fully bullish engulfing candle on the daily here for Ethereum. It looks good. It looks, I mean, there's nothing to say. It looks good, man. It doesn't mean that we're going to shoot right up here to 181 or 200 right away. But it just does mean that there's a lot of buyers left in the market. I mean, this is good. I mean, there's not, this is good. This is good. If this was going to plummet, it would have probably plummeted off of this. And I mean, we already had a beautiful short trade opportunity. We took that short trade on XPT. Yeah, I mean, came right back down to our daily Tenkan. That's our first level of critical support here. It looks good. There's not a whole lot to say, but it does look good. It looks good right now. Let's go down to that 8-hour time frame. The last 8 hours, I mean, just trudging up there really nicely, man. 8 hours are closing above that level of resistance. We actually pulled down to the 8-hour Kijun. That's actually where we pulled down, which is confluent with our daily Tenkan-san. Now let's go back down to the 15-minute. Now that we have a good idea of where we're going in the long term, let's go back down to the 15-minute chart and figure out where Ethereum might be going on the short term. So we made a nice attempt here, a nice rally at trying to get it back above, just as I talked about with XBT, actually, making a nice attempt to get above the bearish Kumo cloud. We weren't able to do that until the cloud actually twisted down. As you can see right here, we trade sideways out of the cloud in a nice ascending support structure right there. The future cloud twists and turns bullish, and now the cloud is turned into support. So as long as we're trading nicely, I would say above the 162 to 164 level, price looks good. I would be okay with a pullback down here to test 162.45. That would be okay. That's where the current beneath cloud is, and also where the 15-minute Kijun. That's also where the critical level of support and resistance is. You can see how this level acted as resistance here. And then turned into support here twice. Now, one thing that we do want to look at here, and I think is important, is as we know, the more times that we test support and resistance, the weaker they become. So as we can see over here, we tested resistance once, twice, made a lower high, which actually brought us down to our recent low. So Ethereum not having as quite a volatile move as Bitcoin. But anyways, popping right back up off of that a little bit more sluggishly than Bitcoin. Bitcoin V-bottomed a little bit more dramatically in my humble opinion. Put in some consolidation at a higher level above that low, and then had a nice bullish reaction. This is actually where we went long from, had an average entry of about 160.20. We were actually, as I talked about when I did the chart replay, let's do the chart, let's do the chart replay and knock out that candle. Again, this is what I was looking at. I saw price trade into the cloud, close nicely above the Tenkan and the Kijun. I also saw the 15-minute bullish TK cross, and I said it's good risk to reward, man, because that means we're likely going for an edge-to-edge trade. 165.60 was my take profit target, with a stop loss down right here at 156.90, I do believe. 156.80, I do believe, actually. Sorry. Because we've already taken out, already had a nice liquidity grab because we have support here and we have support here. And then what does price do as we trade into the cloud? It grabs liquidity by clearing out the stops below those levels of support, and then puts in a nice bullish candle closing above resistance back into the cloud. And I'm looking for that edge-to-edge trade. And took the gamble, man. I was looking for price to actually pull back down a little bit more, so price actually started running, and I had to market enter. These things happen. I was actually hoping for a pullback down to retest that support level, but price immediately shot up and hit my take profit level immediately. Took 50% of profit. Now I'm comfortably hanging around my break even on my stop loss. So we're pretty good, man. We're pretty good on that. And just really looking to play these lower time frames, man, until we get a significant break. I mean, we already had a nice move up here. We're just seeing consolidation, and we have the volatility to actually play inside of the range, and things look bullish right now. Things look pretty good for Ethereum. As I said, I'm going to hedge that by not closing out of my my Bitcoin short. There's no reason to. No matter what happens, I've taken 50% of profit, and the worst possible thing that can happen is I get stopped out, and I make less money than I had originally wanted to. Woo! Okay, who cares? Average entry for 52.30, and I'll take that $200 trade from 52.30 to about 5,000. So still get about 3.5–4% off of that trade. That'll be a good trade. And then, yeah, and if things end up going quite nicely for me, if Ethereum and Bitcoin suddenly have a nice violent spike down and break support, well, then I'm already good in my XBT short. I've already taken 50% profit from Ethereum. That gets stopped out of profit. And it's off to the races with XBT, and I'm probably looking to scale in. Haven't added to my positions at all yet. I'm still waiting for these levels of consolidation to change. Just mostly playing the ranges right now. Things are looking good, man. Here. YouTube can't catch up with Justin. Eli back. Hey, what's going on, man? Can I look at GoChain? Yeah, for sure, man. Let's look at GoChain. Nitin says, hey, Justin, at the market levels where we are, what would make the market pull back to last week's level? So you're talking like 4,000, 4,200? So let's go. Okay, let's go over to the longer term analysis here. I have no idea like why that just that. I've apparently angered the machine. Oh, we have angered the TradingView trading software. Anyways, okay, here we go. Let's go out to that daily time frame and let's take a longer term picture of what we're looking at. Obviously, still broadly looking for that pullback. I would really like to see that pullback if we are going to reach up and touch that 54, 56, 57, 43 level, which is my next selling target. Obviously, I've been very consistent about this. I think that represents the last area that I would be interested in selling in. Would be willing to hold on to a small portion of my position because, again, you never know quite how price is going to go. But I would be scaling out of any long position that I'm in at that current point in time and looking to be short on the market in the vicinity anywhere between 57.43 and 61.50, which I think will be in hindsight a good entry into a short position because I do think that I don't think that this is the beginning of the bull market. I do think that broadly this is a bull trap. Depends on, it doesn't mean it's going to resolve immediately. In fact, I would be surprised if it resolved itself immediately. What you have to remember is that we had $1,000 movement, in a couple hours. So that's going to take some time to work out, man. It's going to take some time to distribute. It's going to take some time to fall back down. But I don't think that we've seen our last. I think that we will trade back in the $3,000 to $4,000 range sooner than most people think. And I would be very, very skeptical that we actually end up closing anything significant above 61.50. Now, that's my opinion. That's my analysis. That's based on everything that I have available for me, and I've been charting these assets for the last almost 3 years now. If we are, but again, like I said, when you have a critical level of horizontal support and resistance, you don't know which way the institutional order flow is going to take it. So should we break through 61.50 and close convincingly above that level and pull back and reclaim that level, have to have the BPC. Then I will be pretty confident that, all that woo-woo is gone. We're in a fairly strong bull market. And then I pretty much just enter into long-term leverage long positions. And I hodl, and then I really worry about my altcoin positions and trading altcoins because I'm comfortable in Bitcoin. I don't worry about taking shorts in a bull market. I just look for opportunities to add more to a long position. Similarly, when Bitcoin was really on the decline, wasn't really concerned about putting on long positions either. Mostly concerned and focused on areas to re-add to my short position. I mean, you don't generally want to trade against the trend. Now, when Bitcoin reached that 3,000 to 4,000 consolidation level that we were trading in for about the last 4 months, that was a little different. You're playing the range. So you're shorting resistance, you're longing support, et cetera, et cetera, et cetera. And you're looking for overbought, oversold opportunities in the market. Generally on higher time frames is going to be your good key to success there. But anyways, so we overhead on the higher term analysis here. We have 54.56 to 57.43, which is the area that I'm keeping my eye on. That's the area that I think price could push up to. I'd be more confident about it. Would price be nice and pull back to 56.50, 46.50, 46.24 is the level that I have on my chart that represents our nice buy-in box right here. That is congruent with the daily Tenkan-san on the Ichimoku. If we go to the 3-day chart, it's not really congruent with a whole lot as far as Ichimoku goes. We are having rejection right now from the 3-day Kijun. We do have our 3-day Tenkan-san all the way down here around 43.50. So I will be attempting to catch a knife here should everything work well, but just keep those higher time frame Ichis in mind because they are pretty bang on. Going to the weekly level as well. The only thing that we can really say here is that we are above the weekly Tenkan-san, but looking at kind of how it's pointed down, we can see that it has acted as beautiful resistance. But honestly, the weekly on BitMEX has not been tradable in any really way, shape, or form as far as Ichimoku is concerned. The 3-day has been really good. You had that nice resistance here, that break above, and that BPC, that reclamation before we pushed off into the long position. Could potentially be looking at the same thing here because the 3-day is trying to close above the Kijun. We've got another day and a half for that to play out, though, so nothing really indicative to say about that as far as, oh, it's bullish because it's closing above, it's bearish because it's closing below. We won't know anything until the candle closes. All we can say with certainty right now is that the previous 3-day candle got rejected really, really hard from the 3-day Kumo on the true high basis and from the Kijun on the closing basis. Now we'll see if we respect that on a higher time frame and do pull back to something like a 46.24 or even to the Tenkan-san here around 43.46. Where is that level actually coming in at on the 3-day? It's 43.39. So let's go ahead and add that level to our chart. I think that we would be remiss if we didn't add that because I do need to be keeping my eye on that. 43.39. I should have had that level on my chart already. Strong support. It's doing it to me again. I think they must have made some change. TradingView must have made some change where if I use a template box, it deletes the line. It's like, no, we don't like you, man. We're not getting down with any of that. That's the 3-day. Dun 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 dun. In the arms of Satoshi. Where's our? So that's actually 49.69. Where do I have this drawn? 49.54. Let's go ahead and put that at 49.69 because it's up a little bit. Going to be our initiation level. So pretty much below that level would be looking for shorts down to our cyan blue box territory, potentially even down to the 3-day Tenkan, depending on how far we have to go to catch a knife. Again, would be having a fairly tight stop loss once we reach this area because, again, I don't want to be catching a knife and holding it all the way to down here. Not the way that I pursue things. I would much rather take a small loss and wait for a better re-entry opportunity. Let's see here. And to really avoid that, what you do is you don't worry about catching a knife. You worry about seeing a bullish reaction off in that area, and you look for a nice kickoff. So you wait for a nice bullish candle to close. You wait for some bullish reaction. You wait for price to start moving up and above, breaking resistance, whatever. When it comes to higher critical levels, like your Kijuns or your 3-day Kijuns or your daily Kijuns or Tenkens or Kumo clouds, those are areas where you can set kind of psychic or predictive limit buy orders. And why does it work? Because I don't think most people are really paying attention to higher time frame Ichimokus. If price reached $5,200 again, would I enter another short? Why would I enter another short? No. No. So the answer to that's no. I don't scale into losing positions. So I already had a nice entry at 52.30. So if price returned to 5,200, I would already be out of my short position. Okay, now I understand what you're saying. So let me rephrase that. So if price returned to 5,200, I would already be out of my current short. It would depend on price action at that point in time. If price were to return to 5,200, there's nothing really critical that I'm seeing there on really any time frame that would make me want to short from that area. In fact, should price return to 5,200, that would actually be pretty bullish to me. So no, I probably would not short unless I saw some significant bearish rejection. Yeah. But where would I re-enter into a short? I would re-enter a short on a close now below 49.69 because that's that 3-day Kijun. That's also that critical level of support that I've actually moved up just a little bit, and that's obviously the initiation level on my chart. So that would be waiting for confirmation. That would be the area where you could scale into a winning position. Dominus Spinay says, what advice would you give to someone looking for a long-term entry? Buy Bitcoin. Like, just buy it. You know, it's a good price. Hey, thanks, guys. I appreciate the love, man. Little Drit 1976 says, greetings from Norway. Can you explain the difference between a healthy pullback and a bear flag? Well, a healthy pullback and a bear flag look different. So a healthy pullback is price pulling back to a critical level, whether you're using moving averages or whether you're using something like Ichimoku, whether you're using something like SSL, Bollinger Bands. It's whatever you want to use. Those are all going to be overlays. Or whether you're using something like horizontal support and resistance or a trend line. You know, a pullback to a good level of consolidation, either a previous level of resistance or a critical level on the chart, typically of horizontal support and resistance. A bear flag is typically something that looks like bear flag is typically something that looks like kind of like this at the top of an uptrend. Also known, you know, bear flags are ascending channels, really at the top of an uptrend. So let's try and find a good example of that. I don't really see one here. Let's see if we can go down to the lower time frames. It's been a day. It's already been a day. Sorry. That's not a really good example of it, man. You know, something like, you know, they typically look like this, to be honest with you, man. You know, you have a volatile movement to the downside, and then price kind of just floats up weekly on low volume, and then closes below, and then just drops. It's continuation pattern, because it's showing consolidation, and what it's showing, really, what's important is this, right? It's kind of similar to what I try to talk about a lot. You want to see what side of the market, the buyers or the sellers, because remember, the market only moves on aggressive market sells or buys. Like how far are they able to push price, and how quickly are they able to push price in their direction, right? So if you're an aggressive buyer and the market's very aggressive and they're able to push price up this far in this short of a period of time, and I know, like, here's the thing, like, cryptocurrency is one of those weird things where we've been in a bear market and every dump has been followed by a pump, right? That's like an odd marketplace. Like, normally markets don't work that way. Typically, when you see consolidation and then a really bullish spike, yeah, you get a pullback, but that's bullish, right? Like, that's a lot of buying. It means there's a lot of interested buyers, right? Generally, in real life, markets are pumps are not always followed by dumps. And I know that, like, that's tragically, like, that's like warped people's brains in crypto. They're like, oh, every dump, you know, is a pump, you know, like blah, blah, blah. And for some coins and for a long time, it has been, but market cycles change and things change. So typically when you see the buyers able to aggressively push price up really fast, and then so the way to differentiate, I guess, between a pump and dump, and also to touch on your question, is so buyers are able to aggressively push price up very quickly, and then you see that sellers are not able to push price down very convincingly. You know, like, here's a good example, right? Like, okay, you have a big blow off, right? And you have a natural pullback, okay? But then after that natural pullback, right, what are the sellers able to do? Like, they're not really able to push price down here below a level of support. They're just not. And what happens? Like, because the sellers are weak, you know, the buyers just pick in and continue on. They continue running train. So, you know, kind of similarly, because, you know, if we saw something, this isn't a good bull flag or anything like that. Like, I don't really see a good bull flag around here, but what what a bear flag denotes is that generally, so say you saw this kind of pattern right here. Sorry, let me take that that down here. Okay, so if you saw this kind of pattern right here, so if we just like transpose this crap right here and put it over here, then that would typically be a bear flag, because it's showing you that you had a high momentum sell-off move, that the sellers were extremely strong and pushed price down very, very far, very quickly. And then the buyers step in, and the buyers are just kind of like weak and anemic. And, you know, eventually you typically reach a level where the buyers run out of momentum and you crash back down below. Not really what we see here. What we see is a pretty big sell-off move, and then we see equilibrium between the bears and the bulls right here. You do see this is a fake out move, because again, it could go either way. You know, people are going to look at that as a liquidity grab, or conversely, you can look at that as, no, this is the bears pushing price lower. That's the danger of using price action, man, and thinking that you're going to be a price action guru, dude. Like, I know a lot of people like just love the price action stuff, and we talk about it because it's good for analytical purposes and it is good to trade off of. But I also rely pretty heavily on my strategy that I've built over time, and I've back tested it 5 years into the past, and future tested it, and current tested it, and it works really, really good, you know. And I know what to do. I don't have to. There's no guesswork in my trading typically. It's all laid out for me. And if I take a loss, cool. If I take a string of losses, cool. It's part of the strategy. It's part of the system. I know that at the end of the year, I'm going to have more equity than when I started the year. It's that simple. Meanwhile, just most of the people that I know that get really obsessed with this price action stuff are sitting there, and they, you know, they're really smug too. Like, they're like, oh man, naked charts are the only way to trade, bruh. All you need is a candle and a volume bar. And it's like, well, okay, yeah, but have fun with that. Like 99% of you guys lose money. Like, you know, I don't understand like where you're coming from with your smug stuff. You know, like show me your account statement. You know. And that's not to say that price action isn't good. I know some great. I know there's and in crypto there's some really, really, really good tools that can help you be a good trader. But typically, most of the individuals that go down that rabbit hole of just staring at naked charts, because that's what like some really cool people on Twitter tell you to do, right? That's a losing battle, man. You know, there's going to be a small percentage of you out there who are going to be able to, you know, have the right, you know, mentality and be able to just have that kind of, you know, Rain Man